Something just snapped in the market. And no, it was not a crash. Axon moved 120.30%, while Nasdaq Composite finished up 1.26%. That's the kind of tape where someone with size is making a statement. Tonight, we answer one question: real trend extension, or a very expensive fake-out? In 10 minutes, we decode breadth, expose who actually got paid and punished, and map the events that could flip. Okay, speed round. 1 minute, no fluff. S&P 500 up 0.81% to 6946.13. Breadth stayed supportive instead of relying on one mega-cap pocket. Quietly constructive, the kind of grind that frustrates dip waiters. Nasdaq Composite up 1.26% to 23152.08. AI-sensitive growth stayed in demand while valuation pressure eased. Buyers were pressing the gas pedal, not tapping the brakes. Dow Jones Industrial Average up 0.63% to 49482.15. Cyclical participation confirmed risk appetite beyond software and semis. Quietly constructive, the kind of grind that frustrates dip waiters. Dollar direction stayed messy, so equities avoided a one-way macro shove. USD/JPY printed 156.34, up 0.35%. Higher levels pointed to persistent carry demand tied to U.S.-Japan. Story of the day starts with a fake-looking rally that didn't fade. Traders came in expecting digestion after recent highs, and instead, the tape kept finding buyers. Setup. Nasdaq climbed 1.26%, and Axon ripped 20.30%. That's not defensive hiding. That's capital chasing growth with conviction. Conflict. Everyone knows this only works while rates behave. US 10-year moved up 0.12% to 4.05. If yields had jumped hard, this would have cracked. Confirmation. S&P added 0.81% and Dow added 0.63%. For once, not just 5 megacaps doing all the lifting. And volatility cooperated. VIX at 1955, down 7.00%. That's the market saying, panic later. Insight. Money paid up for evidence and clipped names with uncertainty, which is exactly why FSLR got hit. Implication. This regime is tradable but fragile. If breadth stays broad, dips get bought. If leadership narrows back to a tiny click, the party gets awkward fast. First trigger. Tomorrow, WED. Feb 25. NVIDIA Q4 FY 2026 earnings. Results. 67.4B revenue, beat 66.2B, 158, EPS, beat 153. 74B Q1 guide, beat 72.5B. Clean, beat and raise. Blackwell demand confirmed accelerating. AI CapEx thesis fully validated. Expect gap up across semiconductor and AI names at Thursday's open. Second trigger, then through, Feb 26, post-NVIDIA reaction day plus initial jobless claims plus Fed speeches. Thursday will be the NVIDIA ripple effect. Chip stocks, AI plays, and software names all reprice on the back of that 74B guidance. Winners and losers time. This is where you see who's actually putting money where their mouth is. Axon rose 20-30% to 595.0 because absolute monster earnings beat. AI-powered policing software business grew 40% in Q4. Translation, buyers paid for proof, not vibes. AMD rose 80% to 230.84 because surged on reports of Meta signing a massive multi-year deal for AMD GPUs to power AI data centers. Translation, buyers paid for proof, not vibes. ORCL rose 3.20% to 178.850 because software rebound extended as Oppenheimer upgraded shares, calling the risk-reward favorable after the recent pullback. Translation, buyers paid for proof, not vibes. FSLR fell 12.40% to 206.05 because cratered on a Q4 earnings miss plus shockingly weak full-year guidance. Translation, the market pulled funding from stories with execution risk. GDDY fell 9.0% to 195.20 because revenue forecast came in below estimates as the company cited slow AI-related adoption. Translation, the market pulled funding from stories with execution risk. WDAY fell 4.80% to 268.40 because issued a soft revenue forecast. Forward look. Here's the part that can ruin a perfectly good thesis. Tomorrow, pressure point. WED, Feb 25, NVIDIA Q4 FY 2026 earnings. Results, 67.4B revenue, beat 66.2B, 158 EPS, beat 153, 74B Q1 guide, beat 72.5B, clean, beat and raise. Blackwell demand confirmed accelerating. AI CapEx thesis fully validated. Expect gap up across semiconductor and AI names at Thursday's open. Then watch this. WED, Feb 25, Salesforce Q4 beat, 381 EPS versus 305, EST 50B buyback, but stock 4% AH. Snowflake beat 0.32 EPS versus 0.27 EST plus 30% revenue growth. Salesforce beating by 25% and still selling off shows how high the bar is. Snowflake's plus 30% growth and 42% RPO jump is more constructive for the cloud thesis. After that, into next week. Thu, Feb 26, post-NVIDIA reaction day. Plus, initial jobless claims, plus Fed speeches. Thursday will be the NVIDIA ripple effect, chip stocks, AI plays, and software names all reprice on the back of that 74B guidance number. Watch for profit-taking after the initial gap up. Bull case, if the tape behaves, NVIDIA's blowout results cascade through the entire market. S&P futures gap, related news, but with signal. No headline soup. NVIDIA obliterates Q4 estimates. 67.4B revenue, 158 EPS, 75.2% margins, and a 74B Q1 guide that left Wall Street speechless. NVIDIA delivered a clean beat and raise across every single metric. Revenue of 67.4B crushed the 66.2B consensus by $1.2 billion. Data center hit a record 61.3B. Gross margins at 75.2% showed pricing power intact despite memory cost pressures. And the Q1 guide of 74B demolished the 72.5B consensus, confirming Blackwell demand is accelerating, not decelerating. This is the earnings report that validates the entire 700B hyperscaler AI CapEx cycle. With every major metric beating estimates, the AI spending is peaking narrative just died. Expect S&P futures to push towards 7,000 and semiconductor stocks to gap up at tomorrow's open. Meanwhile, this policy path feeds straight into yields, then valuation multiples, then growth leadership. Axon Enterprise explodes plus 120% as AI proves it can boost, not destroy, a software business. The relief rally has a poster child. Axon's Q4 demolished estimates with software revenue growing 40%, driven by AI synthesis. Plain English. Today's rally worked because breadth held while rates stayed civil. The market paid for evidence-backed growth and fined execution risk, so stock picking beat blind beta. If I had to bet right now, I'd lean with leadership that still has earnings air cover, hedge where estimate risk is rising, and size around the event calendar instead of candle FOMO. Earliest warning sign is simple. Leadership narrows while indices still look fine. That usually breaks late longs first. Base playbook. NVIDIA pops 4 to 5% at Thursday's open, semis follow, but the broader market consolidates as traders wait for Friday's PCE before making bigger bets. S&P holds above 6950, VIX drops to 1718, and the weekends with a cautiously optimistic tone. Before we wrap, one stat. Okay, this stat genuinely caught me off guard. NVIDIA just answered every skeptic in 60 seconds. In the span of one earnings release, NVIDIA posted $67.4 billion in revenue, plus 72% worldwide, record data center revenue of $61.3 billion, and guided to $74 billion next quarter, exceeding even the most bullish whisper numbers. The Blackwell ramp isn't slowing, it's accelerating. The $700 billion hyperscaler CapEx cycle now has its clearest validation yet. The AI trade skeptics got their answer tonight. Demand is real, margins are holding, and the growth curve hasn't even. If this saved you 30 minutes of chart staring, hit like and subscribe. Drop a comment with the one event you want covered before tomorrow's open. Market Pulse Daily lands every market day. See you in the next one.